Well, howdy there, folks. Welcome into today's video. 7 stocks to speak about in this one here today. Palantir. We got to talk about Palantir. CFO just sold multi-million dollars worth of the stock. We're going to talk about, is a crash imminent? The stock's had a tremendous year this year. Have we stolen all the gains from next year? We're going to speak about that one in this video. Tesla, some big news in regards to Tesla on several different fronts. We'll speak about that in this video here today. All right, Palantir. By the way, the deal is pinned comment down there. Palantir stock. Okay, so Palantir, obviously it's had a tremendous year. We're up 117% now in the stock. In the public count of $57,000, the stock has been doing very well overall. I've bought this stock. I've bought shares as low as $7.18. I paid as much as $16.50 for shares. This kind of shows my conviction in the stock in general and the company in general, that I've bought shares anywhere between $7 and $16.50, just to be quite honest. It basically shows that if the stock's $15, $16, I still think it's a good deal even at those sorts of prices. If I didn't think it was a good deal, I wouldn't be buying. $9.52, I wouldn't have been buying at $9.52 unless I thought it was a good deal, right? So I just think that's important. Now, we have stolen some level of gains from the future. If you're wondering how Palantir stock's going to do in 2024 and beyond, there's no doubt, right? The stock's up 199% year to date. No, that does not mean we've stolen all the gains from the future. That's an important thing to remember. Great companies go on great runs over time, right? And sometimes these great companies can have great year after great year after great year, not just in regards to their business fundamentals, but also in regards to their stock price, okay? But there's no doubt when you go up 200% in a year, you've stolen some level of gains from the future. No different than if the S&P 500 was to go 30% tomorrow. Well, we've stolen a lot of gains in the S&P 500 from the future, right? Now, in regards to Palantir, here's the deal, okay? This stock can still be an animal in 2024, but we need a situation to transpire here, okay? Analysts actually don't have the craziest expectations for Palantir to come through with next year. 19.5% revenue growth expected, less than 19% EPS growth, which is not very good. We need an NVIDIA type moment. I'm not talking about as crazy as an NVIDIA type moment, but if we get a moment where, let's just call it, this year wasn't supposed to be that exciting of a year for NVIDIA. You go back to this time last year, most analysts were not expecting some sort of super exciting year for NVIDIA. And obviously the AI hardware wave came, and the rest is history, right? Now, in regards to Palantir, most people aren't expecting that big of a pickup in business. I mean, this is, 2023 is not even a big AI year really for Palantir. It's for the chip side and the hardware side, but not really for the software side. That's really coming in 2024 and beyond, right? And so this year, 16% revenue growth expected, but then only up to 19%. That's not a big boost up. If we have some sort of game-changing moment here where the revenue growth rates and the EPS growth rates are far exceeding where analysts are at, then we could be in a situation where Palantir goes on another beast run 2024 as well, okay? And next thing you know, it's a $30, $35, $40 stock. That is certainly possible, but we got to come through with the numbers. Now, if we just come through with these sleepy numbers analysts have, I don't think Palantir will have a big year in 2024. We've got to come in, knock the cover off the ball. We come in and do that. We'll have another beast year in 2024. Is it going to be 200% up? I don't know about that. But could we have another 50 to a 75% gain? Sure. If we come in and crush these numbers, absolutely. Okay. Now, with that being said, some executives sold some shares here, including the CFO sold multi-million dollars worth of the stock. Now, something very important is right down here. Okay. It's really small text, so I do apologize. This transaction represents an automatic sale of shares to cover required tax withholding obligations in connection with the vesting and restricted stock units. All sales were conducted in compliance with the reporting person's rule, okay, of the trading plan. So, when it comes to these sorts of sales, this sale probably would have went through this week if the stock was at $9, $7. So when you see sales like this and these automatic sales, you could think oh, that must mean the CFO thinks the numbers are going to be bad, or, they must be doing something bad at the company, or maybe they think it's overvalued. These guys sell shares at all different sorts of prices. Whether the stock was $19, $9, or $900, those shares could have probably been sold. And so that's just something that food for thought in regards to the situation. People always think it's the end of the world. It's over for us. It doesn't work like that at all. And if you look at great tech companies, any great company for that matter, okay, any of the companies you respect, that have done tremendous over the last 10 years, okay, the Amazons and the Googles and the Microsofts and the Apples, and go through all those companies. Look at the last 10 years. Tell me what you find. Massive amounts of shares sold by executives. Year after year after year after year. Now, every single one of those was a bad financial decision. Every single damn one of them, just to be quite frank. But yet they did it. And so to run to conclusions that, okay, this means the end of the world, it doesn't work like that, okay? You know, Microsoft executives sell pretty much every single year. And Microsoft stock just hit a new all-time high. So it is what it is. Like that's just, it's part of the process, right? And that's a big part of their compensation in a lot of these executives. A lot of times these executives make way more in options, in shares that basically vest for them, than they make in their salaries. And a lot of times it's substantially more. I mean, I've seen it be like 10x, if not more than 10x. Like in terms of what their base pay is versus what they get in share compensation, it's like a night and day difference, okay? So that's that in regards to Palantir, okay? Next up here, Tesla. Several different big things in regards to Tesla, okay? First thing I thought was just worth mentioning is now we have marked 3 years of nowhere for Tesla in terms of stock price. Now, look at Tesla's business model in the last 3 years. You're like, wow, look at how much they've scaled. Look at how many vehicles they're selling now. Look at their revenues. Look at how big of a presence they have nowadays versus 3 years ago, right? And that's all true, but the stock price actually hasn't gone anywhere for 3 years, folks. 3 years. That's tremendous to think about. But remember, prior to me getting in the stock didn't go anywhere for 5 years. Then I got in, and the timing was pretty good, and, you know, the next year, like, the stock started a beast. But I can just tell you, like, Tesla goes through these sorts of big, huge runs, then does nothing, then a big, huge run, then does nothing. So that's something, food for thought there, okay? No, Elon Musk calls Swedish Tesla strikes insane as impact spreads. This is something I called out for you guys that was going to be an issue. I called this out, what was it, probably 2 or 3 weeks ago, that this was going to be an issue. It is an issue. It's something that's going on. We're at the tail ends of inflation right now. And when you're at the end of an inflationary cycle, you just see massive pressure from unions, massive pressure from workers to up pay. It's almost happens at the end of every single inflationary cycle, because basically what happens is the cost of everything, of life, of living, goes up substantially, right? At first, people don't make adjustments, or companies don't make real big adjustments. And then toward the end of that cycle of inflation, you have all the workers of the world calling for more wages, right? And so that's what's going on here in regards to this Tesla situation. They're not immune to it. They're just one of many companies that are all facing these sorts of pressures right now. And these pressures are going to remain for, I think probably the next quarter or two. And then you're going to see all these sorts of pressures alleviate in a massive, massive way. And the reason being is inflation is now starting to alleviate in a massive, massive way, and will continue to throughout 2024. And so by this time next year, I don't even think you'll see any of this sorts of stuff anymore at that point in time, okay? Now, Tesla's doing more discounts. Tesla has new deals on its Model Y. Investors might not love that. Tesla's U.S. website now shows discounts for as much as $3,000 on some Model Y EVs in inventory. A long-range Model Y list for $56,000 now can be purchased for $53,000, right? And it goes back into the discounts and the discounts. So, you know what I said? I said, let me go to Tesla's. I have my Model X, I have my Model S Plaid. I'm not in the market for a Tesla right now. I'll get the Cybertruck whenever that's available for me. But I'm not in the market for a Tesla. But I said, I just want to go and I just want to see what the deals are. Let's see what Elon Musk is doing for some Black Friday deals out there on some Teslas, okay, in Vegas specifically. I found some interesting things. I found a Model 3 Performance, 1,800 miles on the odometer, before tax credits, before gas savings, $50,000. That's pretty wild. Remember the $7,500 tax credit. Obviously, you save on maintenance, you save on gas. So this is before that number. I was like, what? For the red, 0 to 60, 3.1 seconds, autopilot, 20-inch wheels. I was like, wow. But that wasn't the best part. I found something better, okay? I found this baby. This looks like a brand new, real deal Holyfield. $37,000. Now that's before the $7,500 tax credit. That's before your gas savings, your maintenance savings, all those sorts of things. 0 to 65.8 seconds, 140 mile per hour top speed, 272 miles of range, autopilot, 18-inch wheels. I'm like, what? Listen to this, $26,690 after probable savings. And you're getting the best affordable car in the world. And not just by a little bit, but by a lot. As somebody that used to own a Model 3 back in the day, I bought my first Model 3. What year was that? I think it was 2019, I want to say. 2019. I had a Model 3 Performance. It's the best affordable car by a mile. And it is nothing even remotely close to that car. And the fact that you can get that car at that sort of price is insane. It's literally insane. I actually texted those photos over to a friend. Friend said, "Is that real?" They didn't even believe it. They didn't even believe that was like real screenshots or that was like real numbers there. They thought maybe I made it up or something. I'm like, no, that's dead serious. Like, you can get that right now for that sort of price. Crazy. You know, I think Tesla's cut price way too much here in the situation, my personal opinion, but that's just my opinion, okay? I don't obviously run the company, but it is what it is. All I know is I secretly wish I was in the market for a Tesla right now, because I'm just looking, I'm like, damn, man. That's where the real best, you know, other than my deal, my real deal Holyfield for $62, other than my deal, this is the second best Black Friday deal on the market here today. I'm like, wow, what a smoking deal that is, okay? Now, margins for Tesla, in my opinion, are going to bottom in the next couple quarters. We'll probably bottom margins somewhere between first quarter and second quarter of 2024, and then margins will start to improve probably around the third quarter into the fourth quarter, and then I think margins can improve for several years after that for Tesla. But we're in a bad margin situation here for Tesla in the short term, and it is what it is, right? But we're taking market share, and we're taking market share. We're going to keep taking market share, and we got services and software and things like that we can sell on top of that down the road to these, obviously, customers that are buying Teslas, and they're going to love the product, and they're going to tell more friends and family members, and more friends and family members in 2024, 2025, 2026 are going to be buying Cybertrucks and Model 3s and Model Ys because I heard great things. So that's all that, okay? Well, howdy there, folks. Welcome into today's video. A few things to speak about here. Palantir stock, the huge news we've all been waiting for, happened here today, and the stock price is tanking. So we're going to speak about that, what's kind of going on there, my opinions and perspectives on that. Alrighty, guys. So first off, let's talk about Palantir, okay? So news comes out that, you know, we get the NHS contract. Huge deal, obviously. We're talking about this is, you know, hundreds and hundreds and hundreds of millions of dollars in revenue for the company and probably good profits. Not only that, it's also great branding for the company that they get a major contract like this, right? Absolutely huge. It also could lead to much other bigger deals in the government space overall, in the European market in general. It also can get a lot of European companies off their butt and to say we should take Palantir more serious as well. So phenomenal news. And what happens to the stock price? It's down like 7% here today, right? Stock tanking. When most people thought when this contract finally comes out, it's going to, you know, the stock price is going to spike higher. And if anything, the stock would be up 7%, 10%, instead of down 7%. So what's going on here, okay? I'll put it like this. This is exactly what's going on. 4 words: buy, rumor, sell, news. 4 words, okay? Buy the rumor, sell the news is exactly what happened here with Palantir. Everybody knew that as a Palantir shareholder cares anything about this company. Everybody knew we were getting this NHS contract. We knew it. It was just a matter of time before the announcement happened, right? And so some people thought when the announcement comes, the stock's going to have another leg higher, and, you know, you need to be playing call options, all those things. This is why it just pays to be a long-term investor. You know, you don't see me trying to, you know, get in and out of Palantir tomorrow and out of it and in and out of it. I own the stock for the long term. I started buying, what was it, last year. I kept adding shares. I've added more shares this year and making tons of money on the stock. And overall, just focus on the long term there. You know, not trying to worry about all these short-term moves. They got crazy options, expirations going on in regards to Palantir. Everybody can play those games. I'm not here to play these games. And, you know, shout out to the other people that are, you know, in a stock like that for the long term. You know, let the short-term people gamble around with the shares and up and down and all that stuff. At the end of the day, as a long-term investor, we're going to do our thing. We'll make our money. And that will be that. And whenever the time comes for us to sell out, whether that's, you know, years from now or 5 years from now or 10 years from now or whatever that time is, right? 20 years from now, who knows? Like, cool, that's when we can make our move. But the rest of it's just a short-term game, okay? Short-term game. Buy the rumor, sell the news. It's a very famous expression. It's exactly what happened here today, okay? The Professor, Jeremy Siegel. What's the Fed up to?
Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. Would you, it's not a Rorschach, I don't think, Jeremy, but would you say everything?
Watching those guys talk sports is kind of like watching Stephen A. and Skip Bayless talk about the stock market. It's kind of like, okay, that's about enough of that.
You've been saying for the last 6 months, we're kind of seeing a lot of it either be exactly true or at least partially true.
Well, I remember on January 1st, I said we're going to have a 10 to 15% gain. I think we're slightly above that on the S&P. Of course, those Magnificent Seven have been a big contribution to that. But Joe, I mean, I only have one worry for next year, and otherwise I think it would be an absolutely great year, and that is that the Fed will be as stubborn in lowering rates if they have to as they were in raising rates, being so very late to the game and causing the inflation. I mean, let's face it, last week's data was weak. I mean, people talk about coming in for a soft landing. We're coming in for a landing. It's not guaranteed to be soft, not yet. Now, I'm not calling for a recession. I just want the Fed to be flexible. I was a little disturbed when Jay Powell said at the last conference, we're not even talking about lowering rates. I think they should be talking about, not necessarily doing it right away, but, the data is looking very different than it just did 3 or 4 weeks ago. Lower inflation, but also a lower level of economic activity that is trending downward.
But you had been talking all along since January, as you said, about that the money supply was actually contracting more quickly than you thought, that the conditions were tighter than they looked, that inflation was being overstated by certain components, and it was actually lower than it appeared. So all those things seem to have been borne out as more data has come out.
Yeah, and really, we've had no growth in money supply over 2 years. You need about a 5% growth in that important liquidity measure to get a growing economy with 2% inflation. I'm a little worried. He better not go back to the narrative of the 70s. Oh, stop and go. We got to absolutely kill inflation. It's very, very different. In the 1970s, Burns pumped money in at 10% a year without fail. Here, Powell stopped it. It started going down. And of course, I became very alarmed. Then he eased up a little bit. It began to rise. Last 2 months, declining again. And now when I look at that real economic data, I said, he's got to be thinking with the lower rates, I'll get that credit going up again. We could have a real great year for 2024.
Well, would there be any reason to start cutting rates if we...
So a risk is, let's say the Federal Reserve cut rates in 2024. While the economy is actually strengthening because real wages are getting in a much better place, so the consumer's in a much better place, right? That could create potentially a bad inflationary environment in 2025 where we're above the 2% and maybe we're in the 3s and 4s in 2025 if we had a much strengthening economy. On top of that, you have a Fed lowering rates, and so obviously there's a lot more loans and people buying cars and homes and all those sorts of things. So that is kind of the risk, right? Is a potential resurgence in inflation, especially if you haven't completely killed it. But I do think we're going to likely get the job done. It's just usually doesn't make sense to cut rates in any substantial way until you're really starting to see some real economic weakness. That's just something to kind of keep in mind. Because I'm sure they don't want to go through the 70s and then have to come through again and start raising rates in, let's say, 2025 or something like that, right? That would be no bueno.
Off landing, Jeremy, why not? It seems like we normalized where rates used to be prior to the financial crisis. You think we should stay here, or are we too tight right now?
Well, I think we should uninvert the yield curve. And basically, it looks to me that we had peaked at 5% on that long end. Now we're 4.5%. Well, that means that we have to start moving down on Fed funds. I mean, it's not going to uninvert by the long bond going up to 5.5 and 6. I mean, some people talked about that a while ago. No, if we're going to uninvert it, we're going to have to bring it. We're going to have to start bringing it down. And just if we have very little inflation, 5.5% Fed funds is a very punishing real rate. Even with the promise of AI and everything else, it'll be hard to overcome that. Look what's happened in the home building. Now we got good housing starts, but home building sentiment has collapsed over the last 4 months, and that is another area of softness you have to consider going forward. So, given inflation is licked, in my opinion, and I've said that for a long time, as you said, real rates are extremely high. With the jobless claims going up, by the way, we had a 2-year high, and in continuing claims, I think it's time to uninvert that curve, which does mean start talking about lowering rates.
Interesting. Yeah, I mean, I think it makes the most sense for the Fed to start at least considering, talking about it. I think probably first quarter, second quarter of 2024, right? And then once again, in terms of actually doing it, you got to make sure inflation's where you need it to be, and you also got to make sure the economy's starting to weaken, to at least a decent extent. All right, next up here, stocks will likely